The first and most important thing that you got to understand is poop. Yes, I said poop. Not poo, but poop. The 2020 pandemic recession, the 2008 housing market recession, and the 2000 dot-com recession all had one thing in common, and that is poop, which is I want you to start by taking a little breath and understanding poop. What is poop? Poop is that panic leads to overselling, leads to opportunity, leads to profits. In each one of these instances, you saw poop play out. It started with panic. Anytime you see any sort of economic downturn, you see panic. The 2020 pandemic, panic. 2008 crash, panic. 2000 dot-com bubble bursting, panic. Every recession has a sort of panic, and especially when we're talking about the stock market, that panic can drive the value or market price of investments, because then people get scared, and then that creates overselling. Now, every asset, I don't care if we're talking about stocks or real estate or businesses or cryptocurrency or anything in between, every asset follows supply and demand. When you have more buyers than sellers, the price of this asset goes up. When you have more sellers than buyers, the price of this asset goes down. So now when you have overselling happening, what does that mean? The prices of an investment go down. Now, some things will go bankrupt, but this is where your financial education comes in to be able to analyze a good investment from a bad investment. And what you'll see is that good investments go on sale. And that's what creates the next O, which is opportunity. Because if you see good investments being sold off, that creates opportunity for you to come in and buy a good investment at a big discounted price. It's kind of like going Black Friday shopping, but instead of buying sweaters and TVs, you're buying investments that can make you a lot of money. And this is where now you have to be patient. And if you have the patience, it can give you the last P, which is profits. But in order for this to happen, you have to be prepared, you have to be financially educated and understand how poop works. Because if you look at really any economic downturn in the last century, poop has played out. You got to understand that poop has happened in the past, and poop will happen again, so you want to make sure you understand poop. Number two is you have to have some emergency savings. The reason why so many people get burned and hurt financially when you see an economic downturn is because people lose their jobs, which is of course bad. But the real reason why it becomes so much more devastating is because most people have no savings cushion. You lose your job and now you have no ability to eat without your credit card debts. And so this is where now I want you to take a step back and understand that if you're spending all of your money today, what's going to happen if something were to happen to your income tomorrow? Now, of course, we don't want anything to happen to your job, but you got to be able to prepare for bad situations. What happens if your company goes bankrupt? What happens if your CEO runs your company into the ground? What happens if you get fired? What happens if you get sick and you can't go into work tomorrow? And so this is just a general life preparedness, but it's unfortunate that this really comes into light when something bad happens. And so instead of waiting for a recession to blindside you, get prepared. Have some emergency savings. Start by saving $2,000 as soon as possible. And then you want to have somewhere between 3 months to 12 months worth of emergency savings to protect you. That way, even if you were to lose your job tomorrow, you could continue to live your life for the next 3 to 12 months, depending on how many savings you have, and not have to change a thing about your spending habits. You can live much differently if you have 3 months to go out and find a new job and not have to change a thing about your spending habits, because you have that emergency cushion there, and that requires you to spend less money today so you have more money for that time. Number three, you got to build some opportunity savings. Let's just say you don't know how to analyze stocks, but you know that you want to invest in stocks. And then tomorrow, the stock market were to fall by 90%. Because markets are crashing, and you say, Jaspreet, I know poop, I want to go out and buy the stock market. Even if you don't understand stocks, you could go out and buy stocks at 90% off by investing your money into the general stock market using an index fund or an ETF. But if you have no money to go out and actually purchase stocks, it doesn't do you any good that the stock market's crashing. And this is where you don't want to waste a good crisis, but in order for you not to be able to waste it, you have to have some money. Not just to protect you, but also money to be able to capitalize on opportunities. So if you were to see an opportunity tomorrow, whether you're in a recession or in a good time, because you see opportunities in bad times and good times, you got to have money to be able to capitalize on the opportunity. So you got to have some emergency savings, like we just said, but you also have to have some opportunity savings. That's cash sitting there waiting to be invested. And that means you got to spend less money so you have money waiting to be invested. Because then when you see an opportunity, Now you can take this money that was sitting there waiting, maybe in a high interest savings account, earning a little bit of interest, and now you say, hey, I got some cash to go out and buy this opportunity that I've been waiting for. The fourth thing that you got to do is invest in your financial education today. This means number one, understanding the financial news. Number two, understanding the financial trends. Number three, understanding the financial education. When it comes to understanding the financial news and the financial trends, these are two different things. The financial news is understanding what's happening in the economy right now. The trend is what's happening in the general flow of money. Where is money going? What types of industries are going to see more money and more growth in 10 years from now versus today? This is where you want to start investing some of your time, researching and analyzing, because one of the things that I like to do is know what investments I want to purchase. If it's real estate, I want to know which neighborhoods I want to invest in. If it's stocks, I want to know which companies I want to buy. And then if something were to happen to these companies or in these neighborhoods, if I were to see an opportunity, I already know what I want to purchase, and then I just can go in and purchase. But this starts with you paying attention to what's happening earlier instead of starting to do your research after the fact. You don't want to play catch up here. You want to be ahead of the game. Now, how do you do that? Well, you can start by studying what's happening in the markets, listening and reading to earnings statements by different companies, listening and reading the press statements put out by companies, reading the source that we can understand what's happening. That will be the best case situation. The second best thing that you can do is read an unbiased news source, kind of like Market Briefs, which is something that I created, which is a free and easy tool to help you stay up to date on what's happening in the financial markets. Market Briefs is a free financial newsletter where my team is breaking down what's happening in things like the economy, the housing market, the stock market, crypto, and the global economy into a fun, witty, and easy to read newsletter. You can read it in less than 5 minutes every morning, and it's completely free. So if you haven't joined Market Briefs yet, I got the link for you down in the description below. By the way, we also have a paid newsletter called Market Briefs Pro that keeps you up to date on the financial trends if that's something that you're interested in. But then beyond that, you also want to understand the financial education, which is now how do you analyze an investment? What's a good stock versus a bad stock? What's an expense ratio on an index fund or a mutual fund or an ETF? How do you analyze these types of funds? How do you analyze a rental property? How do you underwrite the deal to see if it's a good deal for you or not? Start investing in your financial education. That way, you already have the knowledge so you can analyze what's a good investment or bad investment when the opportunity comes. But that requires you to start investing some of your time, some of your energy, and maybe some of your own money, whether it's buying classes, whether it's reading books, whether it's watching podcasts and YouTube videos. Start learning about your investing. Because you could see a great investment opportunity, but if you don't know how to analyze it, if you don't have the money for it, it doesn't do you any good. You got to be prepared, you got to be financially educated, and you got to understand the trends. That way you can actually capitalize on the opportunity. If you enjoyed this clip and you want to continue your financial education journey, I have another video that I think you'll love. All you got to do is click that button right over there. And for those of you who want to stay up to date on the top finance and business news, you can join Market Briefs, my free financial newsletter, by clicking that button below. Thank you for watching, and I'll see you in the next one.